Okay, guys, hello and good morning. Hopefully you're all having a good Monday morning, guys. I mean, here, here, I'm struggling a little bit today from the technical side, but hey, hopefully everything's now working well. Hello, guys. Good morning. Thank you very much for tuning in. This is Easy Markets Daily Pitch with me, Darius Anucauskas, where we're going to have a quick look at the markets, a few technical setups here, what's happening right now, how we can let's say position ourselves, and like how we can prepare ourselves for the day and maybe the week ahead. Now, as always, guys, yeah, before we go further, look, we have to quickly have a read through our risk disclaimer. So, yep, the content we produce does not constitute investment advice or investment recommendations, and this should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll switch off a little bit. I'll give you a few seconds to read the rest, and we can continue. Okay, guys, so yeah, I'm back, and as always, before we jump into the charts, just a quick update and just a quick mentioning of our Easy Markets website, which you can check out for more information about us. So, guys, now let's jump into the charts. So basically, yeah, first of all, I have to kind of, like I said, apologize. Normally, it should start at 7 o'clock GMT time, but yeah, today, yeah, it's Monday. It's a difficult day, probably for some of you as well, maybe for not for everybody, but hey, for me for sure, this one did not start the way I wanted it to start. But hey, look, things happen. The technical side sometimes fails, but hopefully from tomorrow and going further, we could start at 7 o'clock GMT time. Yeah, this one is going to be a quick session. I'm going to fly through a few things, but hey, first things first. I can see there's somebody there in the chat room. Akram256. Hello to you too. Hello. I hope you're having a wonderful, better morning than me. But hey, look, let's jump into the charts. Of course, everybody knows the whole saga right now happening around the SVB Bank. Well, sure say SVB in general, the Silicon Valley Bank. Now, yes, I mean that creates a few issues right now, and kind of puts, as I've kind of put it on my headline here, shade falls on banks, and this kind of puts the actually more shade, the shade on different banks and everything. So it'll be interesting to see how this will unravel and how this will go further. Because another thing, that there's a bit of rumor that maybe, just maybe, the Fed might not kind of raise their interest rates that rapidly as expected last last week. Next week is the Fed meeting, and yep, the Fed interest rate decision. So it will be quite an interesting one to watch. But yeah, let's see how that's going to play out. At the moment, it seems like maybe they might stick actually to that 25 basis point increase, not the 50 as everybody was kind of scared of. And you can see now that, yeah, we looking at the charts here, for example, the ASX 200, the Australian one. This is the one that I want to start off first. You can see that, yeah, we had a strong decline that kind of came on Friday here. We sold off, and we continued today to slide. But the positive thing here is that we kind of we remain around that 200-day EMA. Now, yes, we broke it. We stayed below it. I'm leaning more towards the downside rather than the upside. However, I want to keep an element of the doubt just in case something, starts, let's say the interest rates do not start rising very quickly. And yeah, if we start somehow pushing back above this upside line, and by the way, this is my previous analysis where I looked at the potential idea of a falling wedge, which according to all the TA rules tends to break to the upside. It did break higher, but then look at this. I mean, it pushed a little bit north, but then it kind of reversed quickly south. So that initially we had that breakout, it worked out, but then it found some resistance around here. Near this little hurdle. Let me just put this on the chart here. There we go. Let me just adjust this very quickly. So yeah, so we found a little resistance around here near the 7,200 or 330, and then we reversed back down. So look, in general, I would say yes, we're leaning a little bit more towards the downside on this one, just because it's currently sitting below the 200-day EMA. But of course, like I said, we'll keep the element of the doubt. I mean, we'll see how this week plays out. We have the tomorrow we have the CPIs from the US coming out, which yeah will have its effect on the US equities, and of course then there could be like a knock-on effect on other indices. Now, from this perspective right now, like I said, I'm leaning towards the downside a little bit, but probably at this point I would rather wait for a drop somewhere below the 7,066 territory, because as I can see, it acted as a good area of support. Look, as I said, I'm still bearish, but more sellers could jump in around here near this on a break of this hurdle. Now let's look at the S&P 500. On Friday we had a beautiful rebound. Sorry, not on Friday. On Friday we had a decline, but this candle here we have this is the Sunday's activity, but that little kind of short period, that little rebound on the cash index, yeah, we are now trading. Normally you would see a gap here on probably on some of your charts, but hey, look, what's happening here? We're currently near this key area of resistance. Now, there is no particular kind of specific level on this one, I wouldn't say, because it's more of an area. This area is somewhere around this 3,932 mark, approximately around here. Yes, we had a few false breakouts, but hey, the moment we're still stuck here below this. At the same time, we're also trading below a downside resistance line here, taken from the high of the 14th of February. So in a way, even if we do push back up here, back above the 3,932 territory, we could still class this move as a temporary correction before another possible leg of selling. So at the moment, I would say we can still kind of remain cautiously bearish. But probably the easier option at this point is to wait for a drop below the low of last week near the 3,846. I do understand that this is quite a decent area to be missing out on, but hey, I rather be safe than sorry, guys. So I rather have everything a little bit on the careful side rather than, yeah, on the risky side. It's the market we're dealing with, unfortunately. So if we do drop below last week's low, the 3,846 level, then yes, my next target is the lowest point of December near the 3,788, and then we'll take it from there. The German index DAX. Oh yeah, looking at the picture here. Look, I talked about this last week, and I told you guys to first of all keep your eyes on this upside line, and if we break it, then my next target is the this highlighted zone here, the area around that 15,200 zone, somewhere approximately around there, or this 50-day EMA, which we managed to, well, we didn't manage to reach it yet, but we managed to reach this highlighted zone, test the 15,274. This is my other upper level of the zone here, of that support zone. In general, I would say this upside line, yes, it worked out interestingly, nicely for some time, but now the question here is, well, is this a nice little range that we're having? So far, I think that this might continue drifting like that. It might continue trading like this, but I think that I don't know if this is going to be right or wrong, guys, but it seems like that we could continue trading here inside this range until we get to the Fed meeting next week. So, yep, it could be still a range trader's paradise. It could still be, yeah, it could be a nice area here for those people who like to trade ranges. However, I think that it's setting up. I think it's preparing for a breakout. But when exactly that's going to happen, again, that's, we don't have a crystal ball, unfortunately. But in a way, trying to kind of go from the logical side of it, maybe we're kind of, I would say, preparing ourselves more for a move, maybe during the or after, before or after, maybe the a little bit before, a little bit after the Fed interest rate announcement. So again, let's not over speculate on this too much. Let's see how it's going to play out. The only thing that I can say here is that, hey, if you are trading this, of course, keep your stop losses in place. I mean, have a tight stop loss. Maybe even actually these areas, these highlighted zones, could be the upper side or the lower side of the range here. Could be that your stop loss areas. But hey, of course, you know yourselves better, guys. The moment, like I said, I am just observing the price action. I don't really like what's happening here. Still, I'm kind of carefully maybe aiming for let me just remove this arrow here a little bit in the way. I'm still aiming for the area around here, and yeah, somewhere near that 50-day EMA. And if we clear it, then yes, I would go lower. But again, at the same time, there is still a good chance we could see a pop higher. But for that, I need to see a strong move above the 15,700 zone. Another index, but this one is dollar index. And look at this. I mean, yeah, last week we had a strong decline. And we dropped below the 50-day EMA, and we are currently staying below it. So what it means that there's of course a greater chance now for this one to move lower. We could see this one sliding to the downside. It seems like that the US dollar kind of lost its safe haven status, and yeah, but the one that regained its safe haven status is gold. And yeah, I'll jump into that one in a bit. But look here, for example, right now, given the situation, what's happening right now in America with the whole kind of the whole banking saga, we might see some fluctuations here and there. But at this point, just kind of going purely from what I see right now on the charts, I'm leaning a little bit more towards the downside, as long as we stay below the all of the EMAs here on my chart, the 50, the 100, and the 200-day EMA. At the same time, we also stay below this hurdle, the 104.05. That, yes, could be something attractive for a few more yeah, sellers. And if we stay below this hurdle, then yes, my next target is the 102.39 area, and then we will take it from there. Now, in terms of the upside, well, and for me, for the upside, I would take a very conservative approach here, and I would like to see a push above the 105.87 zone, somewhere around here. That's the current highest point of March. A nice good pop above it would confirm a forthcoming higher high, and potentially more buyers could join in. So let's keep an eye on that one. So gold. So for those gold bugs who really enjoyed Friday's rally, yep, congratulations. I mean, then we had a little. Once the market opened up, we had yeah, a continuation move here to the upside. So yeah, look, at this point, I would say when I previously talked about this, and I said that if we pop above the 1858 territory, I'll aim higher, and my next target will be somewhere around here, this 1890, which we managed to reach perfectly. So good result here. Now the question, what's going to happen further? Now, look, with the at the moment, given that we had a nice rally here, and by the way, if on last week on Tuesday, when we got that Jerome Powell kind of speech, yeah, it kind of declined heavily here, so it exploded. The US dollar exploded to the upside. Look at how well this played out by the end of the week. I mean, not only that we recovered all the losses, we also actually went into kind of positive territory for the week. And if I put in the weekly candle here, you can see it yourselves. Now, judging from this, I mean, there could be a continuation move higher going into this week. However, again, it's not as clear as I would like it to be. But hey, look, what I'm going to do here is I'm considering maybe a bit of a retracement here. As long as it continues to trade below this 1890 zone, I'm considering maybe something of such a move like this, where, oh, where's my arrow? So, bear with me one moment, guys. So, where's my, there we go. Okay. So there we go. So basically, look, I am kind of considering something like that to happen. So maybe, let's say, we could see a bit of a retracement, maybe a test of this 1858 territory, which provided good resistance initially, but now it could take the role of support. Maybe also, depending on how this is going to trade and how many days it's going to take, maybe we could see and maybe we could reach that 50-day EMA. Look, don't forget about tomorrow's, let me just double check. I think, yeah, tomorrow the CPIs are coming out, the US CPI. So that's something to keep in mind. Let me just double check that. Yep, correct. That is correct. So keep in mind, yeah, that something like that could kind of move the market a little bit. Well, maybe the word "a little bit" is not appropriate here. Maybe it could be actually a decent move. But look, today there's not much news. So let's see how this is going to play out. If we kind of, let's say, bounce around somewhere around here, and if we stay below that 1890 zone, yeah, maybe a bit of a retracement like that could be possible here. And like I said, a test of that 50-day EMA here. And then if it holds, another like push higher here could be possible. But if you're not comfortable with that, guys, just probably stick to that 1890 zone. If we clear it again, this could open the door towards higher levels, and we could start aiming for some of these. First of all, of course, the psychological 1900 level, and then maybe some other targets, like for example this 1959 zone. But again, let's take it carefully, let's take it cautiously. And in general, one thing that probably could suit the bears in this whole picture here, technical picture here, is that, look, if when we had that peak here in February, when we reached it, that's 1959 level, we then declined and we tested the 200-day EMA. But what happened here later, we're having a nice retracement. And if you look at it from this perspective, then we're having currently a nice 50% retracement on the Fibonacci. So basically, maybe this level, this the 1900 zone, is actually coinciding nicely with this 61.8% retracement on the Fibonacci. And look at this. I mean, this is quite interesting because, again, if we push above that 50, my next target is the 1900 level, of course. But I'll get more comfortable with that idea if we do push above that 1890 zone here as well. But look, if we continue to rally, if we push through that 1900 level, then yes, maybe I'll start considering a move back to the current highest point of this year, near that 1959 level. But if this area here provides somehow resistance to this either 50-day EM, the 50% retracement, or the 61.8, now that's where it could become a little bit more interesting, and we could see maybe a decline back down. So let's not rush into anything, guys. Again, at the moment, gold is taking the role of safe haven, but hey, let's see if the dollar regains that status later on. Not now, later on, but let's keep an eye on it. Now, just a quick update on oil. Look, I mean, we're still bouncing around here. The same analysis is valid. I've talked about this in my previous video, so I don't know if you watched those, you'll probably know what I was talking about here. Basically, look, we are currently trading above this short-term tentative upside support line, or actually more maybe already medium. No, still a short-term tentative downside resistance line. Oh, sorry, upside support line, taken from the low of the 9th of December. So that's okay. That's in a way good for the bulls. However, the problem for the bulls is that we're struggling with this whole resistance barrier, or and it's not a specific level. It's more of an area. But here we have the 200-day EMA as well. So in other words, if you want to go higher on this one, we have to wait at least for a push through that 200-day EMA, because at the same time we would clear this whole resistance area and we could go further north. Now, for the downside, I need to see a break of this upside support line, and until I get that, I'm just observing the price action, guys. I'm just watching this, and just kind of staying neutral, and yeah, it's not really something that I really like. However, as I said, if you are one of those range traders, then yeah, this could be still the case for you. It could be an interesting option. But just don't forget, if suddenly we start getting closer to one of the sides, that could be an indication that we're maybe getting ready to break it. Now, Bitcoin, very quickly. So of course the US dollar didn't feel well on Friday, and look at this move here on Sunday on Bitcoin. Look at this, we went higher, and I talked about this idea here. I said that, look, if you want to go to the upside, at least a push back above all of the EMAs, and also above above this downside line, which we managed to break nicely. So at the moment, I would say I'm leaning towards the upside. As long as we're going to stay above this downside line and above all of the EMAs here on my daily chart, I'm going to lean towards the upside, and then I'm going to take it from there. So my ideal target is the 25,250 zone here, somewhere around here. And if we clear that one, then yes, great, we could go further north. Now, in terms of the downside here for those bears, look, I think that the easier option is to wait for a drop somewhere below this 19,572. All this area here could be a little bit on the neutral side. It could be just a bit of an issue here. So yeah, let's not rush into anything, and let's keep an eye on some of these levels. But at the moment, I am enjoying the fact that we are currently near this hurdle, this 22,650. If we clear it again, then yes, I will go further north. Litecoin, similar story, guys. We're rebounding here, but the only issue that I have here, we're still below all of the EMAs. So in a way, yeah, it's kind of if Bitcoin looks a little bit more positive, Litecoin is yeah, it's a little bit I would say on the negative side still, because look, we're still below this downside line, we're below all of the daily EMAs here, so yeah, it could still reverse back to the downside. But at this point, I think that the best option is to just kind of wait and see what's going to happen with the US dollar. Now, jumping into a few pairs, guys, very quickly. So AUDNZD, this is one of my favorite ones. I mean, it's very technical. Look, last time I talked about this, and actually when we this one here I posted back in February, mid-February, I was talking about this rising wedge pattern. Now, according to all the TA rules, such patterns, if it's a rising wedge, then it tends to break to the downside. If it's a falling wedge, then it tends to break to the upside. Of course, we do have cases where it happens the opposite way, but let's say percentage-wise, it's more correct to say that it works so far according to the textbook. So so we had that, and this is what I've notified everybody on this idea, and there we go. So what I said before, that look, if we pop above the 1.1031 territory, I'll go higher, but only up until the upper side of the rising wedge, which we managed to test perfectly, and then provided good resistance, and we drifted to the downside. We broke the lower side, so we ended up going lower. Now, what's next? Now, first of all, I need to adjust this. The fact that we are currently trading below all of the EMAs, that of course is a bit of a bearish indication. But hey, the bulls should not kind of, let's say, give up yet, because look, we have some interesting levels here, some interesting lines, I could say, that we need to monitor. And currently we are testing this downside resistance line. Now, it's a tentative one a little bit, but hey, it could still be an interesting one to watch, because look, if we do break this and we stay above it, if we do break this downside line and stay above it, then yes, I will consider a move towards the upside here, towards the EMAs, and then we could take it from there. Now, we do have a nice target here, the 1.0893, which could be a good level to watch. And then, of course, if we start clearing all that, then I would say, look, watch out for this 200-day EMA. If we push through it, then yes, I will get more excited with the upside here. So basically, something like this here should be watched. This 1.09 area in general, I mean, we can just keep an eye on the 1.09 zone. If we clear it, we might clear also the EMAs here on our daily chart, and then we could go further north, guys. So long story short, for now, all eyes are on this little short-term downside line. If we can break it, great. I will go I'll go higher. If we cannot break it and we start falling to the downside here, and we fall below last week's low near the 1.0725 area, then yes, that's where we could start considering again the downside. AUDJPY, also so far so good. Look, I talked about this in my recent videos. I talked about this and I said that, hey, we're seeing currently a nice little retracement here. That's fine, that's great. All my targets kind of got met here. I talked about this. So that's wonderful to see, I would say. So now we're getting that little healthy retracement. Look, I mean, I'm still keeping an eye on this little hurdle, this 90.23. If we remain below it, then yes, I'm leaning towards the downside again. If we push through it back to the upside, there could be some upside potential, but we do have the short-term tentative downside resistance line taken from the high of the 21st of February, which could provide a bit of resistance, and we could get a hold up near this one. But if we start breaking the downside line and we push back above all of the EMAs here on our daily chart, now that's where it could become a little bit more interesting for a few more buyers. NZDCHF, very quickly on that one. Look, I mean, I talked about this and I said that if we do fall below the 0.5664, yes, I will aim for that 0.5620 zone, which we kind of in a way managed to reach, I would say. So now the question here is what we're going to do next. Now, in a way, there could be a similar story as with the AUDJPY one, where we could see a nice retracement here, maybe towards this 0.5721 zone, somewhere around here. My upside scenario, I'll take a very conservative approach and wait until we get a break through this downside line, and then yes, I'll lean a little bit more towards the upside. But at the moment, as long as we stay, let's say, somewhere above the 0.5664 territory right here, there is a chance for this one to move a little bit higher, but again, I would still class this move as a temporary correction before another possible leg of selling. USDJPY, very quickly on that one, guys. Beautiful decline on Friday. We shifted nicely through this upside line. I talked about this in my analysis on that last week, and I said that if we do break this upside line and we fall below this hurdle, this 134.73 area, approximately around here somewhere. Actually, let me just double check. Sorry, 135.11. I do apologize. So if we do fall below this, I will lean a little bit more towards the downside, and so far so good. And so far, yeah, it's doing everything what I wanted to do. We're still hanging below this resistance. Well, now it's the resistance, this support area we broke. We're still hanging below it, and to be honest, now what I can say here is that if I want to go further south, then I would probably take an approach this way. The 133.55, good target, good area of support. If we clear it, then yes, I will go further south. Now, in terms of the upside, guys, of course, this upside line has to go away now. It's no longer needed. But if we do somehow push back above this territory, this 135.26 zone, approximately around here, if we push back above it, we would also be placed above all of the EMAs, and we could see a nice move back up here. So keep that in mind. USDCAD, also just a quick update, nice retracement. Everything's according to the rules. The question here is now, will the rules continue to apply? Because look, we have an upside line here. So as long as it remains intact, there could still be some room for some upside. We could see a nice rebound here and a push higher, but I'd rather maybe stick to this 1.3808 zone just to be a little bit more on the safe side. If we clear it, then yes, I'll go back up. In terms of the downside, I would like to see a clear drop below this upside line. If we do drop below it, yes, this may change the short-term trend, and it could open the door towards initially the 50-day EMA and then maybe the 100-day EMA. So, disconnected. Shows like disconnected. I hope you're all connected, guys. Still, so yep, some sort of technical issues still happening. So guys, yeah, apologies for that. Now, very quickly, GBPUSD, guys. So GBPUSD, look, this one is still nice and positive because look, we broke the downside line. I think I need to wrap it up here a little bit because my colleague is jumping in. So yeah, I need to take that into consideration. But hey, look, I'm gonna fly very quickly through this one. So at the moment, I'm cautiously bullish because we remain above all of the EMAs here and this downside line. But the only reason why I'm cautiously bullish is because I'm only aiming for this little target around here near the 1.2444. EURCHF, guys, very quickly on that one as well. So yeah, we're still below this 0.9848. So as long as we stay below it, I will lean towards the downside. So But of course, I'll get more comfortable if we do drop somewhere below this 0.9795 level. And then, yes, this will confirm a forthcoming lower low, and we could start targeting the 0.9717 level. And finally, EURUSD, beautiful move. Look, I mean, the Fibonacci worked out nicely here. I would say we did have a nice retracement, actually full 100% retracement. Yeah, we cleared some of the levels. We cleared, of course, the most important is this one, the 1.0695. So we're currently staying above it, and to be honest, as long as we stay above it, I'm going to aim for that 1.08 territory. That's my next target. Let's see if we can reach that, guys. So again, apologies for rushing this through, but yeah, the technical issues kind of forced me to do that, and do apologize, guys. So hope you found this useful. Look, tomorrow hopefully everything goes well, and we can start at 7 o'clock GMT time to have a little bit more time in order not to rush through all this. But hey, I have to jump off. I have to give the mic to somebody else, but hey, thank you very much for joining in, guys. Really appreciate that. If you want me to cover a certain instrument, just leave a comment, let's say below a video, and I can pick up on that one in my next video. So thank you very much, guys, and I'll have a beautiful day. See you later. Bye-bye.